In a rising interest rate environment, it is so important to know all of your lending options. This is Dawn Connors at MortgageOne. Today, we're going to talk about an assumption. What types of loans can be assumed, what is an assumption, and how it can benefit you as a home buyer or you as a real estate agent to your client. Let's get started. To start with, an assumption can be done with any type of government loan. That means an FHA loan can be assumed, a VA loan can be assumed, and also a USDA rural development loan. An assumption is where a person can either come on board next to the current borrower and do a simple assumption, or they can do a full assumption in which they take over the payments. They get the same interest rate that the borrower already receives, and the loan term remains the same. So for example, let's say you have a $200,000 loan, current balance, with an interest rate of 3% and 27 years left remaining. Well, that new person can take over the loan with an assumption and pick up where that previous person left off, making those payments with that interest rate of 3% for 27 years. With doing that, there is usually a cost. It's $300 to $500. However, it takes a little bit of time, almost 60 days. So it's a little bit of a slower process. Banks can be arduous sometimes and take a little bit of processing time, but the results can be really worth the wait. So let's talk a little bit more about that and break it down in terms of a specific sale. So let's say you have a seller, you're selling your home, or you have a seller, real estate agents, and the value is worth $250,000. And you advertise, this loan is an FHA loan with an interest rate of 3% and can be assumed. Along comes a buyer that says, I want that deal. And you offer them that $200,000 loan at 3% interest rate and offer them the ability to assume that loan. Well, there are two types of assumptions. There's a simple assumption where that person just basically gives their ID and then they simply assume the loan by being added onto the mortgage statements, and then those mortgage statements come to that person, and that first person, that first borrower, remains the obligator on the mortgage loan. That's called a simple assumption. In a full assumption, the new person totally qualifies. Bank statements, pay stubs, IDs, all the documentation that they would supply to a mortgage rep in order to get approved, they would supply to the mortgage company, the current servicer, in order to get approved for that assumption. So let's do a specific example. You're selling your home, you have that $250,000 sale price. The buyer comes along and says, I want that house for $250,000. So they take on the $200,000. Now you got to deal with the $50,000. Either there's one of three options. Either the new buyer comes with $50,000 to the closing. Option number two is that the seller offers to finance or hold a second loan for $50,000, less the required 3.5% down payment, which we'll talk about in a minute. Or number three, they get a new second mortgage for 96.5% of the $250,000. Because remember, FHA still requires there to be at least a downstroke of 3.5% or down payment of 3.5%. So that seller could offer seller financing for a second mortgage, right? And keep a second lien behind it, and your title company could help you with that. Or they could go and apply and get a second mortgage. So that, my friends, is what an assumption is all about. And the next time we do a video, we're going to talk about an assumption being with VA. So we're going to break that down a little bit more, because that's a little different, has some different twists and turns to it. But for now, an FHA loan can be assumed, every FHA loan. So as a seller and as an agent, a listing agent going to an appointment, you want to find out, you want to start immediately finding out, what type of loan are you in currently? Are you in a conventional loan, or are you in an FHA loan? And if there's any doubt or any question or any unsureness, get a copy of that mortgage statement and then get it to a person like myself and let us look at it to tell you if that person has an FHA loan or if it's a conventional loan. Make sure you have all pages of that mortgage statement so we can see if there's mortgage insurance included in that. This is Dawn Connors with MortgageOne, providing fantastic mortgage solutions and options for your buyers every single day.